Hey everyone, welcome back. Don't hit anything. Don't subscribe to the channel. Don't hit the like button because in this market condition, I'm feeling bad asking for a like button or for a subscribe button. So forget about all of that. Just watch the video for some key levels of what's going to happen in the market. And my friends, we are going to make history today, not in a good way, but in a bad way. So if S&P closes in red, all members of S&P closes in red today, which is the way it's going right now, we are going to make history. It only happened once since 1990. It only happened once. On August 8, 2011, all members of S&P closed in red, and that was the history, or history was made that day after 1990, and today will be the second day. So you know what you are fearing or what you are facing today is not a real market condition. And what I have for you even proves that further. And also, I'm actually changing my viewpoint on the market on my timeline that I had for the market. My numbers are still intact. I still feel S&P is going down to 3,500. NASDAQ is also going to plunge. Dow Jones is also going to plunge. But the timeline that I thought we would see this has been changed. And I feel we are going to see a turnaround in the market. And for all those data and timeline, make sure you watch this video till the end because I have some very important charts that I want to share with you. So I'm not going to take any long and I'm going to go ahead and straight start sharing with you. Okay, so do you see this right here? Actually, let me come in this video right here. Okay, so do you see this right here? This is algo selling. And what you see a red line here, right at the bottom, when we had this algo selling actually right here, as you can see. And then now we have the second highest day of algo selling, which is June 13th that we are seeing today at the open. This is at the open, and these are all losses, and this is all buys that we see over here. So this is not any common day. This is not a regular day in the market. This is heavily, I would say, algo trading or AI trading day in the market. Along with that, take a look over here. These are some of the key support levels for S&P 500. I'm going to make it bigger so we all can see clearly. Okay, so we had this 38.2 Fibonacci level, which was holding the support, which was 38.15 for S&P number, and we broke that. We came under that. Now we have the next support, which is 50% Fibonacci level, is at 35.05. And I've been saying in all my videos from months and months that we are going down to 32 to 3,500 level on S&P. That hasn't changed. I still feel that we are heading to the 3,500 level of S&P. And one of my Discord member actually asked that, hey, are we or have we hit the capitulation yet? I was like, no, we have not hit the capitulation yet. It feels like it looks like it, but we have not. Because I feel we still are about 8% away from hitting the capitulation. And I'll show you in a chart in 1 second. But these are some very important key levels. And my whole idea of making this quick video, because again, this is the information that I didn't know when I was trading just 2 years ago. Because I wasn't paying attention to all these data points that I have access to now, and I'm studying so deeply. So I think this kind of videos really help any investor. Doesn't matter if you are a short term, doesn't matter if you're a long term investor. These are the key points that we have to look at because at the end of the day, you know what's really trending the market right here. The computers, the algos, that's what's selling. That's what's taking over the market. And we retail investors get burned because we feel that, if the market turns around tomorrow and we go up like say 4%, 5%, we all start going to cheering and say, you know what, the bull market is back and we're going to do some dumb things of in options and all. Again, stay away from options right now. We have not hit the capitulation yet. Your options will get killed. Now, let me show you a chart. This is, this is funny. I mean, I can't believe when I'm looking at these. These are from January 1st, 2022. And these are the highest losers. Netflix, Etsy, Line, PayPal, Carnival, Caesars, Under Armour. You talk about streaming, you talk about handicrafts. Etsy was the hottest play of 2020. Everybody was selling on Etsy. You talk about technology, you talk about finance, you talk about cruise ships, you talk about gambling, you talk about workouts, you talk Bed Bath, I mean, Ford, cars. Look at this. This is like everything is in red. So if your favorite company is not doing well, it's not because that favorite company is not performing or basically it's not doing its job. No, look at the market condition. Look at all these things that's taking place in the market. That's why your favorite company is suffering right now, and it's going to suffer as we go more and more into the S&P, I would say 3,500 level. Okay, now let me show you a chart which is going to change everything the way you're looking at the market right now. Okay, so I'm just going to go ahead and get rid of this. This is S&P 500. By the way, look at this right now. This is the moomoo app that I use. And I have seen days where I've seen it all green. And I'm seeing from last, of course, 6 months when this is all red. No matter what it is, Tesla, Apple, Google, Amazon, Disney, Microsoft, they all are down big time. And then we have things like Farfetch. It was such a cool company. I made a lot of money in Farfetch, actually. I bought it for $10. I sold it for like $30 or $40, something like that. It was up all the way to $60. Now it's down to 757. It is below what it was 4 years ago. So this is all crazy market condition. But let's not actually go there. This is S&P 500 chart on a weekly term. So this is 1 week right here. So this is weekly chart. The reason why I say that we haven't hit the capitulation yet is because this is 200-week moving average. Okay, this red line. Any time in the past, and I've drawn circles and I shared actually with our Discord members, anytime we have hit the capitulation, or I would say anytime the market has gone down like it's going down right now, we have always touched the 200-week moving average. You see over here. So let's start with this. 2007, we were in that 2008, 2007 crisis. We were in it for a long time. And as you can see, we were under the 200-week moving average right here. This was when? This was actually, sorry, this is 2011. So I'm actually going to increase it. Okay, so 2011 right here was June or yeah, July of 2011, and we were under the 200-week moving average for almost, I would say, 926. So we were in it for about 4 to 5 weeks under the 200-week moving average. Then in 2016, we touched the 200-week moving average in February, and then we took a flight up. Then back in 2018, when we had that crash in 2018, we actually hit the 200-week moving average again in December, and then we basically took a flight up. Then in 2020, we know what happened when the crash happened in 2020. We were in it for all the way from March till about, I would say, April 6th. So we had about 4 or 5 weeks of under 200-week moving average. And look what's happening right now. We are not in 200-week moving average right now. We are still away about 7 to 8% from the 200-week moving average. And once we touch that, there is no guarantee we're going to take a flight up from there in 1 week, or we are going to stay in that for at least 3 to 4 weeks. Nobody knows that. So this is going to be really interesting. And I really wanted to bring it to all the members. Doesn't matter if you're a Discord member or you're a YouTube watcher, because my sympathies with everyone, because I know how bad I'm hurting in the market. I mean, my long-term portfolio, which I take pride in, which was up like 500% because I made some good plays, is down for the year almost 40 to 47%. My short-term portfolio is down 65%. This is crazy times. You know, for investors like I would say myself, which has been in the market for some time, I'm feeling so much pain, and I cannot imagine some of you, those who started investing late, maybe in 2020, maybe in 2019, maybe in 2018, how you guys must be feeling. So again, I think we are, and now the timeline. Okay, so the timeline. So I was thinking that we are going to hit the capitulation. We are going to hit the market extreme bottom around June 15th, near the FOMC meeting. I still I still feel that today is really that day when we are going to see this downturn in the market, and then market may rally tomorrow or day after as we get to Wednesday. And Wednesday, Fed will come out and will shock us, saying that, you know what, inflation is not under control. We are going 75 basis point, or we are open to 75 basis point in the next in July, or they may do it in June. But what market has not priced in that how long will they continue doing it? Will 75 basis point will be the norm for the next two meetings, or will they only go for 1% maybe in September and then they will end in December? That market has not priced in. And that's why I feel that we are hitting the 3,500 level in S&P. In my opinion, we are going to see that. But the turnaround in the market is going to happen around August and September. So you have all this time to DCA into your favorite stock. I alerted my Discord members that in my 401k account, I just told the firm to buy some Tesla today. Tesla could very well touch 550 in my opinion, but I feel that Tesla buying at these levels, yes, they will have a bad quarter. When the second quarter comes out, the stock is going to basically go down. But then the third quarter, fourth quarter anticipation and the call, Elon Musk is going to come and say that we have all the factories full force. Now we're going to triple the production, and then Tesla is going to go to the moon. I can't even say that word with a straight face, to the moon. But I feel that we are going to see the market turn to a positive side by August, September, around that time. And we have this opportunity right now, June, July, August, to basically DCA into our favorite stocks. And some of my favorite stock that I have mentioned over and over again is of course, Tesla is one of them, then Microsoft, then Google, then Amazon. Amazon is going to be hard because they have all this inventory, and I feel inflation is going to take a toll on Amazon. But who better can fight inflation than Amazon? You got to think about that too, right? I mean, if Walmart and Target, with all their real estate, they're having issues, they have so much inventory, they still have to pay their rent, they still have to pay their retail employees. Amazon at least don't have that cost. They have huge cost of warehouses and all. But I feel that Amazon is in a better shape to recover from this recession or inflation in the coming years, as compared to Target or Walmart, which is of course have to deal with so much more infrastructure cost. So this is really interesting times. I have said it again and again in my previous videos that this is unprecedented times for even long-term investors. Nobody has seen these times in their portfolios before. So don't feel bad. Keep the positive attitude. Look at the 5-year, 10-year horizon and DCA into the companies that you feel are going to give you the max return. I just want to come and share this. I hope I provided some value. And if you found anything useful in this video, then go ahead and give it a like. Otherwise, forget about it. Thank you so much for being here. Until next time, you all have a sparkling day.